Okay, so the topic for tonight's class would be corporate liquidation, and as the name suggests, this would involve the liquidation of a corporation. So the scenario here is very simple, class. You have a corporation that has more liabilities than assets, and thus it has decided to liquidate and to end its existence. This is a topic under corporations under financial distress or difficulty. And there are multiple options available to corporations that are in financial difficulty. They may undergo quasi-reorganization. They may enter into debt restructuring with their creditors. But one option is to simply give up and surrender and minimize your losses instead of continually operating at a loss and decide to liquidate. Your intermediate accounting classes in your earlier subjects class included quasi-organization and debt restructuring. So the topic for this subject now would be the corporate liquidation. Again, this would be very simple. We will just be liquidating the assets of the corporation to pay off its outstanding liabilities. Okay. In the examination class, this would be one of the easiest topics that can come out. And this is in the exam that will include corporate liquidation. You're expected to make up for all your past examinations that did not give you good scores. This is the topic that you should take advantage for you to improve your grades. Okay, because the questions here are very simple. Our main issue here is how much would the creditors then receive as a result of the liquidation. So the main issue here would be the distribution of the assets of the corporation. The distribution of the assets of the corporation among all the creditors. And again, this would be very simple. And as what you've already experienced in the examination class, there will be multiple questions in a single problem. And you can expect the same thing to happen for problems in corporate liquidation. And for problems in corporate liquidation class, a lot of questions can be considered a bonus question. Okay. Normally, there will be 4 basic questions class. Number 1, how much will fully secured creditors receive? Number 2, how much will partially secured creditors receive? And number 3, how much would unsecured creditors with priority receive? And number 4, how much will unsecured creditors without priority receive? Okay, so basically here we are categorizing our creditors into 4, and in most problems you will be asked how much will each group of creditors receive. Okay, so what are these 4 categories of creditors class? Number 1, fully secured creditors. When do you have a fully secured creditor class? If you have a liability that is secured or collateralized by another asset, and the collateral is sufficient to cover the entirety of the obligation. For example, you have a liability worth 1 million, okay, and it is secured by a property worth 1,500,000. Okay, that would make the 1 million liability a fully secured liability. Why do we say it is fully secured? The security is sufficient to cover the entirety of the liability. How much was the liability? 1 million. How much was the value of the security? 1,500,000. So definitely the security is sufficient to cover the entirety of the obligation. And if that's the case, that liability will be considered a fully secured liability. Now in that example, okay, how much do you think will the fully secured creditor receive? There's a fully secured liability amounting to 1 million. It is secured by 1,500,000. How much do you think will the creditor receive? 1 million or 1,500,000? 1 million only. Okay, it will receive the entire 1 million. Is the fully secured creditor fully paid? The answer is yes. Okay, then you would ask, but the value of the security is 1,500,000. What will happen to the extra 500,000? It will be made available to the other creditors. Okay, but what's the scenario here? the assets available to the other creditors class are insufficient to cover the entire obligation. But as far as the fully secured creditor is concerned, he will be fully paid. Okay? And that is why, class, if you'll be asked, how much will the fully secured creditor receive? That would be a question that will be considered as a bonus question. Because it's very easy. How much will the fully secured creditor receive? Whatever is the amount of the obligation. If the problem already tells you that that obligation is fully secured, what does that mean? That that creditor will be paid 100% of its claim. So you have a 2 million obligation and the problem says it's fully secured and you are asked how much will be paid for that 2 million, and your answer would be 2 million. Because fully secured creditors get 100% of their claims. That's why they are called fully secured. Okay? Do you have to compute, class? The answer is no. Now there's a second type of secured creditors class which we call the partially secured. Okay? Why are they called partially secured? Okay, let's break that down into two. Why is it called secured? Because there is a security for that liability. But why is it only called partially secured? Because the security class, the value of the security is not sufficient to cover the entirety of the obligation. In our example earlier, the liability was 1 million. What do we have to change in our example to make it a partially secured? We will just change the value of the security instead of 1,500,000. The example earlier was 1,500,000. To make it a partially secured, what do we have to do? Just change the value to less than 1 million. So if in our example, the value of the security is only 800,000, how are we going to classify the 1 million security liability class? It would be classified as partially secured. Why? It is still secured by a specific asset, but the security is not sufficient to cover the entirety of the obligation. Okay? And that's one question that would require a solution on your part. Okay? Because if you'll be asked, how much will the partially secured creditor receive? Okay? You cannot just say 800,000 plus. Okay? But will the partially secured creditor receive at least 800,000? Yes. The entire value of the security, the 800,000, will be paid to him. But will the partially secured creditor only receive 800,000? No, because for the unpaid 200,000 class, it can still participate in all the other assets. Okay? So how much do we expect for the 1 million partially secured creditor to receive? At least 800,000. It is guaranteed up to 800,000. What will happen to the unpaid 200,000? We expect it to be paid, but it will not be paid in full. The 200,000 will be paid at the same rate as all the other creditors. Okay, and the amount that will be paid for the 200,000 will depend on the remaining assets. Third type of creditors class, unsecured with priority. Unsecured with priority. Why is it called unsecured? Because there are no assets used to secure such obligation. Okay, but why do we call it with priority? Because it was designated by law to be prioritized class. Okay, and what are these three that are commonly considered as unsecured with priority class that you will encounter in the problems? You have three. Number one, taxes. Those that are payable to the government. Of course, the government enacted a law that will make its claims against you a priority. Number two, salaries and wages of your employees class. To protect labor, the law provides that the unpaid salaries of your workers should be preferred over all your other liabilities. Third would be the administrative expenses related to the liquidation. Plus, we're talking about administrative expenses related to the liquidation. We are not talking about administrative expenses related to your operations. Okay, we don't care about that. The administrative expenses in relation to the liquidation. Because if you do not guarantee class, if you do not prioritize the costs related to the liquidation, do you think someone will be willing to act as a liquidator? The answer is no. So that someone will be willing to act as a receiver, as a liquidator class, we are going to guarantee that the value of its services will be paid in full. Okay? Because what if your uh, payment rate is only 50%? Do you think someone will provide you future services when he will only be receiving 50% of the value of the services rendered? The answer is no. Okay? And again, this is the third type of creditor, unsecured with priority. And how much do they expect to receive, class? They expect to receive 100%. Okay, and this would be the second bonus question, class. Okay, you have one problem. Compute for the amount to be paid to partially secured, fully secured, unsecured with priority, and unsecured without priority. How much will fully secured creditors receive? 100% of its claim. How much will unsecured with priority receive, class? They will also receive 100% of their claim. So one problem, four questions, and the answer to two of them is always at 100%. Will that require computation on your part? The answer is no. If it says your unsecured with priority is 500,000, then they will receive 500,000. Okay? And that's why I'm telling you examinations which include corporate liquidation as a coverage should be taken advantage, class. You're supposed to get a lot of points from corporate liquidation problems. Okay. Fourth type, class, fourth type, unsecured without priority. They are the most unfortunate. Okay. They do not have any security and they are of last priority. The only instance that they will be paid, class, is if there are still remaining assets after all the other, after the fully secured and the unsecured with priority are paid. Okay. So out of the four common questions, two will always be at 100%. Only two needs to be computed, class. Okay. And to solve for the amount to be paid to your unsecured creditors without priority, you will just have to compute the percentage, class, or the recovery rate. Okay. And that is the only area that you may consider difficult, class. But again, it should not be considered difficult. Once you have the rate, then everything else would be very easy to answer. Okay. Let's proceed to problem 6-1. The Metrobank loaned 40,000 to Ilocano company. The loan is secured by inventory with a book and fair value of 50,000 and 30,000 respectively. What amount will the bank receive if unsecured creditors receive 25% of their claims? How much is the claim of Metrobank here? It's how much, class? 40,000. And it was secured, correct? It was secured with an inventory. How much was the book value of the inventory? 50. How much is the fair value? 30. The 50,000 book value is greater than the amount of claim. Do you follow, class? But the fair value is less than the amount of claim. So the first exercise here would be, how are you going to classify the 40,000 claim against the company? Is it partially secured or fully secured? Partially secured only because the only relevant valuation here, class, would be the fair value. Okay? You might argue that it's fully secured because the book value is 50. That is correct if we were to use the book value. But again, in corporate liquidation, the goal here is to dispose all your assets for you to have cash to pay off all your outstanding liabilities. So the amount that is relevant here is not its book value or historical cost, but the amount of cash that you can get from it. And the amount of cash you can get from the asset is represented by its fair value. So very important concept or theory, class. The only relevant valuation here is the fair value. And since the fair value is lesser than the value of the claim, this claim will be considered a partially secured liability. Okay. So if you will be asked, what's the lowest amount the creditor can receive? Definitely it will be 30,000. But why is the answer here not 30,000 class? Because there is still a portion that can participate in the other assets of the company. Where did we get the 30,000? The inventory. Why is it devoted to the 40,000 loan? Because it was made as a security. But how much was paid by the inventory? Only 30,000. What was the unpaid portion? 10,000. What will happen to this 10,000? Will this be completely worthless? The answer is no. The 10,000 can still be paid. It's just that it will not be paid 100%. It will be paid together with all the other unsecured liabilities. It will be paid at the same rate as your unsecured liabilities. Okay, and the problem already gives you the uh, recovery rate class, which is 25%. What does that mean? Unsecured creditors will recover 25% of their claim. So if you have the 25% class, how much is 25% of 40,000? How much is 25% of 40,000? 10,000. But why is that not the answer? Because the 40,000 is not considered a unsecured liability. Okay? What portion of the 40,000 is considered unsecured? Only the unpaid 10,000. So only the 10,000 will be subjected to the recovery rate of 25%. Okay, so how much is 25% of 10,000? But why is that not in the choices? Because of course you will not only receive 2,500. The 2,500 here, the 2,500 here is the additional amount that the creditor will receive on top of the value of the security, which is 30,000. And that is why the amount that will be recovered here will be 32,500. Okay, but so let's just get rid of all possible confusions, class. Okay, for problem 6-1, what will be the scenario wherein the answer will be 40,000? It will be 40,000 if the 40,000 liability was fully secured. But why were we able to determine already that this is not fully secured? Because the fair value of the security is lesser than the amount of claim. How much was the claim? 40,000. How much was the fair value of the security? 30,000. So what is it secured? Yes, but it is only partially secured. Okay, and again, we do not use the 50,000 because the only relevant valuation here will now be the fair value. Okay, next. Under what scenario will our answer be 10,000 in problem 6-1 if you simply multiplied 40,000 by 25%? Because the 25% is the recovery rate of your unsecured creditors. But why is it wrong to multiply 40,000 with the 25%? Because the entirety of 40,000 is not unsecured. A portion of it is secured. In fact, 30,000 of it is secured. What portion of the 40,000 claim is unsecured? Only 10,000. So only the 10,000 will be subjected to the recovery rate of 25%. Okay. Why is the answer here not 30,000? Because even though the value of the security is only 30,000, you can still claim against the other assets, other remaining assets of the entity. Okay, but it's just that the amount that you'll be able to recover will not be 100% anymore. And that's why the answer here again is 32,500, composed of the 30,000 value of the security plus the 25% recovery on the unpaid portion or the unsecured portion. Let's proceed to problem 6-2. The Abra company owes 200,000 on note payable plus 8,000 in interest to its bank. The note is secured by inventory with a book value of 160,000 and a fair value of 120,000. What amount will the bank receive if unsecured creditors receive 75% of their claim? How do we classify the 200,000 class? Partially or fully secured? Partially, because again, it is secured, but the value of the security is lesser than the amount of the claim. And which valuation is relevant here, the 160 or the 120? 120. Okay. So anytime you encounter a corporate liquidation problem class, you can crash out book values, carrying amounts. Because again, the only relevant valuation here would be your fair value class. It's an unforgivable mistake to forget that the value that you should be using for corporate liquidation problems would only be the fair value. Okay. So what will happen here? The 200,000 will be partially paid with the proceeds from the inventory. Okay, and how much is the proceeds from the inventory? 120,000. And how much then is the unsecured portion? It will be 80,000. Okay, but one novel issue is introduced in problem 6-2. What will be the treatment of your 8,000? Okay, it will be added uh, to the carrying amount of the liability class, and it will be paid based also on the recovery rate. So that means the total unsecured portion now, the total unsecured liability will not just be 80,000, but instead it will be 88,000 after you add the interest of 8,000. Okay? And that 88,000 class will be the one that will be subjected to a recovery rate. Okay? It will participate in the distribution of the other remaining assets together with all the unsecured liabilities. Okay. So how much is 75% of 88,000? 66,000. Why is that not in the choices? Because aside from the 66, the creditor will have also would have also received the proceeds from the realization of the inventory in the amount of 120. So all in all, this creditor will receive 186,000. And that's already your answer. Problem 6-3. The red company owes 15 million on the mortgage of its building to Citibank. The building has a net book value of 20 million and a fair value of 18 million. When red company filed for liquidation, it owed interest of 90,000. When the building is sold for 18 million, the interest due on the mortgage is 200,000. What amount will the bank receive if the unsecured creditors receive 80% of their claims? Let's classify first the 15 million obligation class. Is this fully secured or partially secured? Fully secured because the value of the claim is only 15 million and it is secured by an asset with a book value of 20 million, correct? No. Fair value of 18 million. Okay? Both amounts are beyond 15 million, but the reason we classify it as fully secured is because of its fair value, which is 18 million. Okay? But the answer here, what did we say earlier? If it's fully secured, how much is it expected to receive? It will get 100%. Okay? But why is the answer here not 15 million? Because it also because interest has also accrued. The issue now for us is how much will be paid, the 90,000 or the 200,000? It will be the entire 200,000 and it will still be considered, it will still be covered by the security from the building class. So that means the entirety of the 15,200,000 will be paid. Okay, so you will be ignoring the 80% here because this is a fully secured claim. So the answer for problem 6-3 would be 15,200,000. No, the 90,000 is already included in the 200. So the 90,000 was the amount of interest as of the filing of the petition for liquidation. Okay, but of course, time has lapsed from the filing. The interest has now increased to 200. Okay, the 200 is part of the 90. Before it was 19, at the time of payment, it has increased to 200. Okay, it's not that we are not paying the 90. The 90 is part of the 200. Okay, next problem. The question in problem 6-4 would be a somewhat new question which we have not yet mentioned. The question is, what is the amount of deficiency? Class, if you'll be asked for a deficiency, I prefer you just go back to the basic accounting equation. And what is the basic accounting equation? Assets is equal to liabilities plus owner's equity. So basically, class, your deficiency would be your negative equity. Again, the scenario here is that your liabilities are greater than your assets. How can that be possible? When supposedly assets is equal to liabilities plus equity, how is it possible that your liabilities would be greater than your assets? That's possible if your equity is negative. And if you're asked for deficiency, it's basically asking you for your negative equity. You go back to your basic accounting equation, and whatever is your negative equity will be your deficiency. Okay, but understand that when you try to come up with your total assets class, you should not be using the carrying amounts or the book values. Compute for your total assets using the fair value, compare that with your liabilities, and that should give you your negative equity. So let's do that in this problem. How many assets do we have? 3 current assets, land and building, and goodwill. Okay, but instead of the 320,000 total, instead of the 320,000 total, we will not be using that one because again, you will have to recalculate your total assets based on their fair value. The 320 is based on their book values class. Okay, so the current assets instead of 80 will only be will be brought down to 50, and then your land and building instead of 200 it will be restated to 240. Okay, and goodwill class will always be 0 because you do not have any residual value. You cannot dispose of your goodwill. Remember that goodwill will only arise from a business combination. You cannot sold goodwill individually or separately. So it's as if we only have 2 valuable assets, which will be our current assets at 50, our land and building in the amount of 240. So the total fair value of our assets would be 290. Okay. Next, compute your liabilities. How many liabilities do we have here? Accounts payable and mortgage payable. Okay, so you will have a total of 360. Okay, now you plot that in your accounting equation. Assets is how much, class? 290 equal to liabilities in the amount of 360. And to make the accounting equation correct, you should have an equity in the amount of negative 70. So that means your deficiency would be 70,000. If the value of your assets is only 290 and you have liabilities amounting to 360, that means you are deficient in the amount of 70,000. Again, just go back to the basic accounting equation. Basically, your deficiency will be your negative equity class. Because again, the scenario here is that your liabilities are greater than your assets. Another way, class, to solve for your deficiency is to use the book values class, okay? And just reflect the losses and gains. What do I mean? Based on this balance sheet class, how much is your equity, your negative equity? You have common stock of 100, and you have retained earnings of, negative retained earnings of 140. So at this point, your equity is at negative 40, okay? But what happened to your current assets? Its fair value or net realizable value was lower than its book value. So it's as if you have a loss on realization or an impairment loss in the amount of 30. And what will it do to your deficit class? It will simply increase your deficit. Samot kadako imuhang negative balance. Okay? And then for your land and building, you have a gain of 40,000. Does everyone see the gain of 40, class? Book value of 200, fair value of 40. So you add that to your retained earnings. But goodwill, from book value of 40, it will be reduced to 0. So there will be a loss of 40. Okay? So you had already negative retained earnings class. You have loss or impairment loss from current assets in the amount of 30. So that will be 170. But you have gain from the land and building in the amount of 40. So that will be 130. And then additional loss from the goodwill of 40, you will have 170. Negative retained earnings. Then deduct your common stock of 100, you will still arrive at negative equity of 70,000. But again, it's simpler to simply go to your basic accounting equation. Assets at fair value of 290, total liabilities of 360, you will have a negative equity of 70,000. Question for problem 6-5 is what percentage of their claims are the unsecured creditors likely to get? Okay, we will now have to learn how to compute for the recovery rate class. And basically, recovery rate class is simply your assets available for distribution divided by your total liabilities. Okay, assuming no secured creditors, assuming no creditors with priority, your recovery rate would simply be your assets divided by your liabilities. Okay? Your assets class is 2 million, and then, but your liabilities is 2,500,000. How much will be your recovery rate? That would simply be 2 million divided by 2,500,000. That's the most simple class. Assets over liabilities will give you your recovery rate. But because some liabilities are with priority, some liabilities are secured, the computation will not be as simple as assets over liabilities. But again, the concept class, the concept, you have assets of 2 million, you have liabilities of 2,500,000. How much will they receive? Assuming they have all equal rights, then they will just have to share equally the 2 million. So you divide the 2 million equally among the 2,500,000. Okay? So you compute the recovery rate, it would be simply 2 million divided by 2,500,000. Okay. Again, class, this is the topic that you're supposed to take advantage of. Okay. I understand if some of you appear to be bored because again, this topic is very easy, but this is supposed to be the topic that you will be able to improve your grades. Okay. So basically, all your assets divided by your liabilities. How much is our total assets here? It was 290. But the problem here, class, is in computing for the recovery rate, do not include the amounts that are dedicated to secured liabilities. Okay? So even though the value of your total liabilities is 290, I hope everyone sees the 290, that's 50 plus 240. Okay? We cannot include it in our computation because the 240 is dedicated to the mortgage payable class. Okay? So exclude the 240. So what asset is actually available for all the unsecured and without priority obligations class? Only the current asset of 50,000. Okay? And divided by your total liabilities. How much is your total liabilities? It was 360. But we do not include the liabilities that are secured. Why? Because they are not paid based on the recovery rate. They are based on the security of the obligation. Okay, and what liability is secured here? Mortgage payable. So exclude that one. What will be paid based only on the free assets class? 160. Plus, we have a term free assets. These are assets that are not used as a security. Hence, they are called free. Okay? So basically, your current asset will be referred to as a free asset. Is land and building a free asset? No, because it is designated as a security for your mortgage payable. Okay? So to make our formula more specific, class, diba, we've said that the oversimplified formula for your recovery rate is assets over liabilities. Instead of assets, it should be changed to free assets. And what do we mean by free assets? assets that are not used as a security, divided by liabilities. But instead of liabilities, we will only include unsecured liabilities. Okay? We will use only unsecured liabilities. So how much was our current assets class, our free asset? 50. And then our unsecured liability is 160. But that is not yet the answer class. Why? What kind of liability is your mortgage payable class? It's secured, correct? But is it fully or partially secured? Fully. Why? Because how much was the liability? 200. And how much was the value of the obligation class? 240. So when we sell the land and building, how much will we get? We will get 240. And what will happen to this 240? It will be paid to the mortgage payable. But are we going to give the entire 240,000? No, we'll only give 200,000. Why? Because that's the amount of liability. So what does that mean? There is now an extra 40,000. And what will happen to this 40,000? This will be added to your numerator. This will be included. This will join your free assets class. Okay? So our numerator will not just be 50. It will be increased by the extra 40. Okay? So your unsecured creditors class will be glad if there are fully secured creditors whose security are more than enough to cover the obligation. So our numerator will now be 90. I hope everyone sees the 90. 90 divided by 160. And how much will that give you? 56.25%. And that will be your recovery rate. Okay. Now, let's just complete na lang yun the formula for your recovery rate. We have oversimplified the formula for the recovery rate class. It was assets over liabilities. We improved on that oversimplified formula by changing assets to free assets and by changing liabilities to unsecured liabilities. Let's improve that further, class. Change free assets to net free assets. What then do we mean by net free assets? Okay, your the free asset was the 50 class. Then the 40 was the additional free asset. Okay, but there's also an item you have to always deduct from your numerator class. And that is the payment to your unsecured creditors with priority. So before you compute class, before you compute the recovery rate, deduct first the amount to be paid to your unsecured with priority. Why should you allocate amount already for unsecured with priority? Because as the name suggests, class, it is with priority. And how much will they get? 100% or full value of their claim. Okay? But why are we not doing that for the fully secured? Why are we not deducting that in the fully secured? Because in fully secured, there is an asset designated to pay for it. But for your unsecured with priority, are they going to be paid 100%? Yes. But do we have a specific asset dedicated to pay off the unsecured with priority? The answer is no. So it will be taken from your free assets. Okay? So the complete formula for our numerator now, class, is this. Free assets plus excess, how do we call this one? Excess on fully secured liabilities minus unsecured liabilities with priority. Diba, class, we have 4 common questions for corporate liquidation problems. How much will fully secured creditors receive? How much will partially secured creditors receive? How much will unsecured creditors with priority receive? How much will unsecured creditors without any priority receive? And 2 of these 4, the answer will be 100%. Okay? The recovery rate will be crucial for your partially secured and your unsecured without priority. Okay? So basically, the challenge in your part lang class is to correctly compute for the recovery rate. And even if you compute the recovery rate wrong, you can still get two other questions right. Class. So again, this is the topic that you're supposed to do well. Class. Okay, I cannot emphasize this enough. When I gave you your midterm grades, I told you that there's still hope to improve your grades. But if you will not do well in the exam, including corporate liquidation class, I can't see any hope anymore. So you have to do well on corporate liquidation exams. Okay. So again, our numerator for our recovery rate class would be your free assets plus excess from fully secured liabilities minus unsecured liabilities with priority. Okay. Then in our denominator class, diba, we started with liabilities and then we improve it to unsecured with liabilities, unsecured liabilities. Okay, but the complete denominator should be unsecured liabilities plus plus unsecured portion of your partially secured liabilities. Your denominator should include the unsecured portion of your partially secured liabilities. Because remember, the unsecured portion of your partially secured liabilities will still have to be paid at the same rate as all your other unsecured liabilities. So again, how does our formula look like now? In its simplest form, class, it will be net free assets over total unsecured liabilities. But if we will break it down, net free assets would be your free assets plus the excess on your fully secured liabilities minus the unsecured with priority divided by your unsecured liabilities plus the unsecured portion of your partially secured liabilities. Because essentially, the unsecured portion will still be an unsecured liability. Let's try to apply that in problem 6-6. How much will the holders of notes payable collect following the liquidation? Notes payable class. Is this unsecured or secured class? Secured. Okay, the problem says it is secured by a land. Is it partially or fully secured? Partially. How do we know? The value of the land is 90,000. Again, the relevant valuation here is the fair value. You can put an X mark on the entire book value column. Okay, so the only relevant valuation here is the 90,000, which is not sufficient to cover the 120,000 notes payable. Why is our answer here not letter C? Diba it will be paid 90,000 from the value of the land? Yes, but the remaining 30 portion, the 30,000 portion will still be paid based on the recovery rate. Okay, it will participate in the distribution of all the other remaining assets. Why is our answer not 120? Because the liability is not fully secured. So what then do we do? Class, take note, class. Even without solving, class, we can already figure out the answer, class. Okay, we know that the answer is not letter C because again the unsecured portion will still be paid partially. Okay, but we know that the answer is not 120 because that would make the obligation fully secured, which is not the case. What do we expect to happen? The notes payable will be paid 90 plus some other amount. But if you look at the choices, class, only one choice is greater than 90. That is not 120. So I'm willing to bet the answer here is 108,000 even without solving, class. If your answer is letter B, class, automatic, that's wrong. Because it is already secured by an asset with a value of 90. Under no circumstance should it receive lesser than 90,000. It should receive greater than 90 but lesser than 120. Okay, but let's just try to practice solving for the recovery rate. Okay, where do we begin? Free asset. Which asset is free here? Is the current asset free? Yes, because the problem did not say whether it is used as a security. Is the building and equipment free? Yes. Only one asset is used as a security, which was the land. And what values are we going to use? Fair value or book value? Fair value. So our free assets would be 33,000 plus 110. Okay, but what else do we have to remember? Don't forget to add the excess on the fully secured. Do we have a secured liability here? Yes, the notes payable. Is it fully or partially secured? So no excess to talk of. Do you understand? So plus 0. And what else do you have to remember for numerator class? Deduct unsecured with priority. And what are the three common things that will be appearing in the problems as unsecured with priority? Taxes, salaries, and administrative expenses. Do we have those in this problem? Yes, you have income taxes of 8,000. And then salaries payable, class. This is what we're talking about. The salary payable, which is 6,000. This is with priority. This is unsecured but with priority. Next, administrative expenses for liquidation, which is 20. So how much amount are we going to deduct from our free assets class? 34. Does everyone get the 34? That's 8,000 plus 6,000 plus 20. So 143 minus 34. How much will that give you? 109,000. That will be our numerator. That will be our net free assets. Divided by what? Unsecured liabilities. How many liabilities are unsecured here? But again, do not include the with priority class. Okay? Only include the unsecured without priority. Income taxes. To be included in the denominator or not? No. Notes payable. Not entirely. We'll go back to that later. Accounts payable to be included in the denominator or not? Yes. Salaries? No, because again, it will be paid in full. Bonds payable? Yes. So you will have 83 and 70. But again, what do I want you to remember for the denominator class? You add the unsecured portion of the partially secured. Do we have a partially secured here? Yes, 120. How much was the unsecured portion? It was 30. So how much then would our denominator be? 83 plus 70 plus 30 will give you 183. And that will be your denominator class. Was it 109? Was our net free assets 109? 109 divided by 183. How much will that give you? 60% exact? Bungkag siya? How much? 59 point? 59.56. Okay, and I think the problem rounded it up to 60%. Okay, so you multiply now the 60% with the unsecured portion of 30,000. How much is 60% of 30,000? 18. You add that with the 90, you would get 108,000. So how much, class, how much will be the total payment to the notes payable? It will be 108. Composition, the 90,000 value of the land plus the recovery of 60% on the unsecured portion of 30,000. 60% of 30,000 is 18,000. 18,000 plus 90 will give you 108,000. Okay. Any question, class?